Hey everyone, welcome back to another video. In this video, I'm going to be talking about NIU Technologies, and I actually got a request from a viewer to do an update on NIU Technologies because I made a video about this company in the past, and since then a lot has changed, not only with the internal business operations of the company, but also with their stock price and the future projections for their growth. And we can actually see that over the last year, their stock price has completely collapsed by 76%. Same time period that the S&P 500 is down 15%. But that being said, we can see that over the last month, their stock is up over 50%, and over the last week, it's up about 20%. So maybe they're in the middle of some sort of recovery. We can see this little uptick in their stock price here at the end. So it is possible that they could be in the middle of a recovery, but at the moment they're still trading at an even lower share price than they were when they were listed in 2018. And they're definitely trading at a way lower share price than they were at their peak of around $49 to $50 per share at around February of 2021. And so I'm just going to look into some of the recent news that's come out about this company as well as their financial statements, and then figure out the intrinsic value per share of NIU Technologies based on the current projected cash flows for the company. And so right here we can see a little news article talking about some of the challenges that NIU is facing at the moment, particularly with the increase in prices for their lithium ion batteries to power their electric scooters that they sell. And so in particular, we can see right here in the first paragraph that they talk about how they're struggling with the global issues in the price and supply of lithium, which is obviously hampering the amount of sales volume that they have for their electric scooters. But that being said, we see that they point out in the second bullet point here that their international sales volume, that's to countries that are abroad besides China, is actually really good, and we'll get a better look at that in their financial statements in a moment here. But that being said, the demand for their products is sinking in China, and that's having a negative effect on their revenues. And then lastly, right here, I want to point out something interesting, which is that NIU investors, as I say right here, shouldn't forget to keep monitoring the delisting situation, which could affect the liquidity and demand of these shares. And so obviously, recently, a few months ago, news came out that some of these Chinese companies that are listed on American stock exchanges could end up getting delisted. And if that were to happen, obviously, that would greatly affect the share price of a lot of these ADRs, these American depository receipts for these Chinese companies. They would completely collapse because there wouldn't be any liquidity in the market, since you wouldn't be able to buy and sell these shares on American stock exchanges anymore. And so that is definitely a concern for anybody who is investing long-term into any of these Chinese companies. And so right here we can see their balance sheet. They're comparing their December 31st, 2021 balance sheet to September 30th, 2022. And this RMB right here, for those of you who don't know, is just the Chinese currency yuan. And so they're listing their results on their balance sheet in yuan, but then they also translate it to dollars for the balance sheet for September 30th, 2022 on the right side here. And so we can see that their total assets during that period have increased from 2.4 billion yuan to 2.8 billion yuan. And that translates to about $404 million worth of total assets sitting on their balance sheet as of the end of the third quarter of 2022. And they also have total liabilities right here of an increase of around 1.1 billion yuan to 1.5 billion yuan, about $215 million worth of total liabilities on their balance sheet as of the third quarter of 2022, and then around $188 million worth of total shareholders' equity as of the third quarter of 2022. We can also see that their additional paid-in capital line item has increased, meaning that they have been issuing more shares in order to try to raise capital to finance their business operations, which isn't really a good sign because adding more partners to the company to raise capital ends up diluting previous shareholders and reducing the share price for their company stock. But then on top of that, we can see right here, they have an accumulated deficit line item, which is basically usually where the retained earnings line item would be if a company had operating profits historically. But in NIU's case, they have only really recently started turning a profit, and so as a result, their accumulated deficit is sitting on their balance sheet, a total of all of their operating losses since inception. And unfortunately, that amount has actually increased from 539 million yuan to 552 million yuan over the period of December 2021 to September 2022. Then right here, we can see their financial statements are a little wonky here. They have them like half on one page and half on the other, but that's okay. It's still pretty easy to read. This right here is their income statement. They're just showing their 2021 and 2022 results in yuan on these columns, and they're translating that to US dollars for the third quarter and then for the 9 months, the first 9 months of 2021 and 2022. But I'm just going to focus on the third quarter here. And so we can see that for their revenues in the third quarter, they've decreased from 1.2 billion yuan to 1.1 billion yuan year over year here. And that's a decrease of around 6% year over year. And then in a moment here, I'll actually go into the breakdown to show why that revenue decreased and what's contributing to that. And we can also see that if we translate that to dollars, it comes out to be about $162 million worth of revenue in the third quarter of 2022. But something interesting here is that even though their revenues have decreased, their gross profit margin has actually increased. Even though their gross profit overall has decreased from 245 million yuan to 250. Well, actually, their gross profit has increased. That's my mistake. I was reading it incorrectly. So their gross profit has actually increased, and their gross margin increased too from 20% in 2021 to 22.1% in 2022. And so that basically shows that their cost of revenues has actually decreased year over year. We can see right here, it's decreased from 981 million yuan to 898 million yuan. And so that's a good sign. Obviously, their cost of revenues decreasing, that increases their gross profit margin. But unfortunately, we can see that was not the same case for their business operations. The cost to actually operate their business increased substantially, particularly in this sales and marketing expense line item from 89 million yuan to 170 million. And so that's an increase that's pretty substantial, and it's had a pretty big impact on their bottom line net income here. We can see their net income has decreased from 91.7 million yuan to only 2.8 million yuan. So that is a pretty substantial decrease, only about $405,000 worth of net income from a top line revenue of $162 million. So that is not a good net margin at all. Their net margin actually came out to be about 0.3% in 2022, which is down from 7.5% year over year. So that's a massive decrease in their net profit margin. And actually, if I go to page 2, we can see, as I pointed out earlier, a bit of a better breakdown of their revenues here for the third quarter. And we can see that their electric scooter sales in the China market, they decreased about 20% year over year. But that being said, their sales in international markets abroad increased 351%. And that's mainly what contributed to that 6% decrease overall in their revenues, is the fact that their largest market, China, decreased by 20%, but internationally, their sales increased a lot by 351%. Then on top of that, if I scroll up a little bit here, we can see they point out some interesting highlights from their operating results. They sold 320,000 scooters total in the third quarter of 2022, which is down 19% year over year, so almost 20%. But their sales in China decreased 32%, while their international e-scooter sales increased to 57,000 scooters, which is up over 1,000% year over year. So internationally, similar to what the article pointed out, their international volumes are great, but the demand for their products in China is sinking, and that's ending up having a very negative impact on their bottom line net income and on their revenues, mainly because China is their largest market at the moment, but because of the the national lockdown measures happening in China, there's a lot less demand for urban mobility solutions in their urban areas because people aren't really going outside that much, and that's having a very negative impact on NIU's revenues. And so now right here, we can figure out their intrinsic value per share using this discounted cash flow model. Yahoo Finance at the moment is estimating that NIU is going to grow at about a little under 3% for the next 5 years. I cut that in half to 1.45% for the next 5 years after that. If we convert the free cash flow metrics for their company from yuan to dollars, they only had about 6 million or $6.9 million worth of free cash flow in 2021 after subtracting their capital expenditures. And they only have about $160 million worth of cash sitting on their balance sheet after subtracting their debt. And they have about 76 million shares outstanding. And that puts their intrinsic value per share at around $3 per share. So basically, NIU Technologies is still overvalued at the $4.61 per share price that they're trading at. If we look at this chart right here, on October 31st, 2022, so that's just like 1 month ago, basically, they were trading at $2.62 per share. So at that point, they were trading below intrinsic value per share about 1 month ago. But now that they have risen about 50% over the last month, 20% over the last week, it looks like at the $4.61 share price, they're currently trading above their projected intrinsic value per share with these growth rates that are being estimated by Yahoo Finance. And so on the right-hand side here, I compared them to some of the main competitors in the electric vehicle market, Tesla, NIO, and Ford. And we can see that in comparison, NIU has the second best gross profit margin behind Tesla's 25%. They have the third best net profit margin. Obviously, there are two American companies here, Tesla and Ford, and then two Chinese companies, NIU and NIO. And NIO is actually unprofitable, which is why they don't have net profit margin or return on assets, because their business is losing money each year. NIU, at the very least, is profitable, but they aren't nearly as profitable as Tesla or Ford, which are in double-digit net profit margins, whereas NIU is only at 6%. But NIU does have the highest return on assets out of the four companies listed at 10.52%. So they are optimizing their assets to get a better return on their business and be more efficient. So from a competitor analytical standpoint, looks like Tesla has, obviously the best gross profit margin, and then Ford has the best net profit margin. So I would say NIU is probably middle of the pack in terms of comparing them to these other three companies. And then from an intrinsic value standpoint, they unfortunately aren't trading at below intrinsic value per share anymore like they were 1 month ago. So 1 month ago, if anybody bought into shares of NIU Technology, that definitely it looks like it would have been a good time to buy into shares of NIU Technology, especially considering the fact that they increased 50% over the last month. So that would definitely be a really big return in a short time period. At the current share price, though, not really sure what to think of NIU Technologies. There are some unique risks here with Chinese companies, mainly as a result of the fact that obviously it's a different government in China. They aren't as free market as the United States. And then on top of that, the potential risk of Chinese American depository receipts getting delisted is unique to Chinese companies. And, obviously, if you're investing in American companies like Tesla or Ford, you really don't have to worry about that as much as you do with these Chinese companies. So definitely seems like a bit more of a high risk, high reward investment. Not too sure if I would be buying into this company at the current share price, but let me know what you guys think in the comment section down below. Is NIU Technologies a buy right now at the current share price? Let me know what you think. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.